Welcome to today's economic update. In this video, I am going to be discussing the latest developments in Canada's economy and the actions taken by the Bank of Canada to manage inflation and interest rates. Let's start with inflation. In April, Canada's annual inflation rate increased to 4.4%, the first rise in 10 months, up from 4.3% in March. Bank of Canada had previously expected inflation to come down to 3% by the middle of the year and reiterated this expectation on June 7th. Bank of Canada also highlighted concerns about consumer price inflation. This 3-month measure of core inflation, which includes volatile items, have been running between 3.5% and 4% for several months. Bank of Canada expressed worries that consumer price inflation could potentially remain significantly above that 2% target they're trying to reach. Moving on to the performance of the Canadian economy. In the first quarter, the economy grew considerably more than expected, expanding by 3.1%. This surpassed the Bank of Canada's earliest forecast of 2.3% growth in its quarterly forecast published in April. Consumers continued to spend and exports experienced a surge during the first quarter. Additionally, unemployment remained low at 5% in April and housing markets showed signs of strengthening. However, the Bank of Canada noted that the supply of workers is quickly getting absorbed due to high demand. Now let's talk about interest rates. In January, the Bank of Canada raised rates by 25 basis points, 0.25%, and announced a pause on a further rate hike to monitor the economy and inflation. This pause followed forth 0.25 percentage points of rate increases since early 2022. Financial markets have been pricing in a 50% chance of a 25 basis point rate hike, according to TD Securities on June 6th. The current overnight rate target at 4.75 is the highest since the spring of 2001. The Bank of Canada provided commentary on the global situation, emphasizing that the underlying inflation remains stubbornly high. Major central banks worldwide have been signaling that interest rates may need to rise further to restore price stability. The Bank of Canada is closely monitoring several factors, including excess demand in the Canadian economy, expectations for future inflation, wage growth, and how companies set prices. These factors play a crucial role in achieving the Bank of Canada's 2% inflation target. Lastly, the Bank of Canada continuing its policy of quantitative tightening. This means the bank is reducing the size of a balance sheet by allowing bonds it bought to stimulate the economy to mature within the reinvesting the proceeds in additional bonds. And that concludes our update on the recent developments in the Canada's economy and the actions taken by the Bank of Canada. Stay tuned for more updates as the situation continues to evolve. Thank you very much.